Hey guys, Toby Mathis here, and today we're going to go over House Hacking 101, 5 ways that you can learn to live in your house for free. And what I mean by that is where the house is generating enough income so you never have to pay anything. It covers your mortgage, it covers all your expenses, and probably puts a little bit of money back in your pocket. In fact, let me give you a story of an actual client up in the Pacific Northwest, and she lived in a property where it was a 5-bedroom home, and she started renting out the rooms in it on a weekly basis to third parties. And she started with one, then went two, then three, and four. And she would rent them out by the week, which she found that her average tenancy was right around 2.5 years. So even though you think weekly rental and your alarms go off, you can actually do this and be effective. She was in a urban area where people wanted to be closer to work, and that's who she tended to rent to, is people that lived there for 5 days of the week and then would go back out to the suburbs or off to where they resided so they didn't have to commute. So long story short, she did that with one property, and she was averaging about $200 a week, which ended up being about $880 a month per room. She ended up moving to another property, renting all 5 bedrooms, and then started doing it again on her second property. Got to where she rented out all the rooms in the second property, and then she did it with a third property. She moved in, and that's where, when we met her, she was actually residing in that third property and getting ready to keep on scaling up. She was bringing in about $15,000 a month as a result. And her tenants essentially were buying her property. So that's what we're going to be talking about today, how to do that and different ways to do that. So I'm going to say that there's actually 5 ways. So I'm just going to do 5 ways. And number 1 is that house hacking, just traditional house hacking. But I'm going to give you some other options. Number 1, you could just live in a house that has lots of bedrooms, or turn them into lots of bedrooms, and you could live in one of the rooms, and you could rent out the others. That's not too uncommon. What's really common is people that do the duplex thing. They live in one half and they rent out the other half, or they do a fourplex where they reside in one and live in it. So it's always going to be some version of this. I have a building, and I have it broken into rooms. An apartment building would look like this, maybe even more, but you could do that underneath a roof as well, right? I could do something called pad split. That's where you're renting out a room by the week, and you might do that with 2 bedrooms, and that might be enough to cover your cost of housing, depending on how much you paid, what your interest rate is. Like, this is where it really gets interesting. If I went out and I wanted to buy that apartment complex, right, I'm probably putting 20% down, and I'm paying a high interest. If I buy this as a house where I live and it's my primary residence, I could be doing, let's say FHA, let's do it 3.5% down, and my tenants then are paying for the cost of my financing. They're literally buying my house for me. And that's what house hacking is about. And you could do that in the traditional sense, where I get a house and I rent out rooms. I could use a pad split to get those rented out. I could do a duplex, 4-plex, 6-plex, 8-plex. I could do that. I could have a separate structure even on that property, which we'll get to in certain ways that you could do it as well. But maybe I have 3 or 4 properties or homes on a single location. Actually, one of my favorite client stories was somebody that had land, and they were going to sell that land to buy an investment property. And I said, well, why don't you just put manufactured homes on the land? So you could do that. I said, go, talk to your city, talk to your county, see what it would take. And they were able to put a septic tank in, and voila, they were able to put a whole bunch of, like, the thing retired them, literally gave them enough passive income coming into where it covered all their expenses, just putting manufactured homes. Before you think it's crazy expensive, manufactured homes, at that time we were getting them for 70, 80 grand a pop. You could still probably get them in that range. They're not overly expensive. You put a little pad down sometimes you don't even have to do that. And voila, you have a cash flow machine, right? It's not uncommon to get one of those where it's actually skirted and position and everything else for about 100 grand, you're making $1,500 to $2,000 a month. They're great little cash flow machines, but you can even do that on a property. All you're doing is you're saying, hey, I'm taking a property and I'm asking, what else could I do with this property? And then you do that so that you're not having to pay for the property. But house hacking is the big one. Easy to start, something you could do literally, in some cases, in a matter of days or weeks, and start a nice little revenue thing flowing. If you don't want somebody there all the time, then you could do the short-term rental. Let's just say Airbnb, where you're going to rent out a room in the home. I don't think you could do VRBO. I think that requires the whole house. But you could do something where you're doing short-term rentals like an Airbnb. Actually, I'll put that in there too. Just short-term rental, where maybe you say, hey, throughout various parts of the year, maybe you're in a convention area, maybe you're in an area that gets really a lot of traffic during a particular time of the year, and you just say, you know what? I could make pretty good money, even if I did this for just 3 months out of the year. I'm going to go ahead and I'm going to take a room or two of my home, or maybe you have a second, maybe you have a casita or something, and I'm going to make that into an Airbnb and I'm going to rent it because it gets a premium. Maybe you have sports events that come to your town. Maybe you have the F1. Maybe you have Super Bowl. Maybe you have whatever. Fill in the blank. There's an entire section of the code, 288, that's called the Augusta Rule, because of the masters, where people would short-term rent out their houses. And if you don't know how this works, you could rent out your residence, a room in your residence, for 14 days or less, and you don't have to pay any tax on it, period. 288 subsection G2 of the code. So there's people that at portions of the year, the premium on their property is so high that they're able to get, in some cases, $5,000 or $6,000 a day for their home. So they say, hey, you know what, for 10 days, I'm going to do that. I'm going to make 60 grand, covers their cost of their mortgage and their property taxes, and they don't care. The rest of the year, they're living there tax-free. That allows you to do it. So it's just another idea, using those short-term rentals. Number 3, this is for you guys in California or places where we have real property crunches, where we're really underwater, we have massive homelessness. You add an auxiliary dwelling unit to your house and you rent it out. And I have clients that are getting $3,500 a month for an ADU that they stick in their backyard. Some of these states and some of these cities, it's crazy because hey, I have the space. Maybe you're living on a half acre, maybe it could even be smaller. But if you have the ability to put in an ADU, price it out and see whether, wait a second, that puppy by itself covers not just its cost, but my cost too of living. And all of a sudden, I'm living in my house for free. So that ADU becomes your friend. And where they're really becoming prevalent, when you see them passing new laws that allow ADUs, that's kind of like a flashing red light saying, hey, pay attention to this, because it means it's probably at a premium, or housing is a premium. Number 4, I knew a lot of folks that did this. It's called live in flipping. Now, flipping to accountants means dealer status, paying ordinary capital gains, ordinary income on the sale of a property that you buy to fix up. But when you do this as a residence, you get the cover of Code Section 121. What does that mean? It means if I live in a house and while I'm living in it, I fix it up. And I do this every 2 years. I can do it every 2 years, 2 or more. But every 2 years, I buy a house, I live in it. While I'm living in it, I fix it up and sell it. I do not have to pay tax on the capital gains. If I am single, it's up to $250,000. If I'm married, it's up to $500,000. So I could literally buy a house. Maybe it's a fixer. Maybe I do this every 3 years. I just schedule myself out or whatever. It doesn't stress you out. And then over those period of years, you fix up the house. I know a lot of folks that do this that are builders themselves, and they do it as the project on the weekend, or they take a month and they fix it all up, and they make the house more valuable because they know under Section 121, excuse me, under Section 121, that they're not going to have to pay tax on the capital gains. You didn't rent it to anybody. It's not like that. You don't have to worry about any of that stuff. When I do this, I get to not pay tax on any of that capital gains, so long as I lived in it as my primary residence 2 of the 5 years prior to selling it. So I could even live in it, fix it up, rent it for 2 years, rent it up to 3 years, and then sell it and still get that 121 exclusion. If I'm renting it, anytime you have rent, by the way, guys, on any of these, there's going to be some proportionality. So if it's your home, then you're still going to get to write off. You're going to depreciate the rooms that somebody's using. So let's say you have a 5-bedroom house and you're renting out 3 of the rooms. You're going to be depreciating 3/5 of your home, for example. You're going to get that depreciation, but you're also going to have the rent coming in. This is going to offset and keep you from having to pay tax on that rent. It works like a charm. If I'm flipping a house and I live in it for 2 years and then I rent it for 2 years, then I sell it, I have 2 options. I could do the 121 exclusion and just be happy I don't pay tax on the capital gains, and I'll have a tiny amount of depreciation recapture. Or I do a 121 and a 1031 exchange, and I buy another investment property. You can do that. Yes, you can. It's kind of crazy, right? All right, and then the last one, and this is when I debated on whether I included it. It's one of those fun things because as a tax guy, I know the numbers and I'm like, hey, this could be really huge, but I'm not sure if everybody's going to get it. But I'm just going to do this. Number 5, which is tax deductions and credits. And the most obvious one is like a solar credit. So there's things that you can deduct as a homeowner. Number 1 is like your mortgage interest. Maybe it's offsetting enough of your tax, depending on the value of your home, to whether it's going to make a dent into your interest or into your income to where it's saving you enough in taxes. But the solar is where you could literally, I'm going to go through a hypothetical for you. You get a 30% tax credit on putting solar on a home. So let's say that you're used to paying energy prices. Let's say it's $500 a month or something like that, your energy costs. And you swap that out and you do a $100,000 solar unit on your home. That's the installation cost and the cost of the solar, whatever. Let's just say it's $100,000 and you finance it. And that financing, you're going to pay $500 a month for the next, let's just say 10 years. I don't know. I'm just going to make something up. What it does, though, is it gives you immediately a $30,000 tax credit, which you can spend like cash to offset your tax bill. So what did it do? It just put $30,000 in your pocket. I don't know what it costs to live in your home every year, but that could very likely wipe out, for a lot of you guys, it could wipe out your cost of living in that house for a year. And then you say, but I have to pay this thing off. Yeah, you're not paying the energy bill. You're paying the exact same amount that you were doing before. So you're getting this tax credit. There's other things. There's some other energy efficient credits that are floating around out there. But that one just is kind of glaringly saying, hey, if you do this and you swap out, run the math, because it may give you a year or 2 years of living free, in your house, just because you decide to pull the trigger on it, and it's not really costing you anything out of your pocket. In other words, the savings are paying for the unit, and then once the unit's paid off, now it's gravy. Now it's putting money back in your pocket. And then at that point, now you're really looking at, hey, is that going to help me live a lot less expensive? Maybe it's not, I'm living in the house for free, but it's definitely taking a bite out of it if I don't have to pay for energy costs. So those are the 5 that I wanted to point out, 5 ways that you can actually live in your house for free by using house hacking or other strategies. So that, I just keep looking at these whenever I think about the live and flipping. I've known so many people that have done that. And every few years, they're selling a house and they make $200,000 and they don't pay tax on it. And I'm always like, gosh, bless it. They conjured $200,000 out of the air, right? Yeah, they did a little bit of work. Sometimes they have contractors. Maybe it cost them $50,000 to do the rehab, maybe 100, but they tend to double, triple, quadruple it. And the beautiful part is it's tax-free, and that pays for their housing. I like that concept. Or like the very first example I gave you, where you're house hacking your house and you end up building a little real estate portfolio as a result, and you're just doing it slowly. I love watching that. The ADU, especially down in California, amazing results that we keep seeing with these folks that are going out there and they're putting in a little $100,000 unit that is generating $3,500, in some cases it's more, per month, depending on what they're putting in there. I've seen people actually put treeplexes, or where you have three. What is a triplex? Where they've done 3 units in the backyard that is literally covering all their costs, period. Now they're living for free. I love watching stuff like that. If this is the type of stuff that gets you excited, like and subscribe. If you think I missed any, or if you want to elaborate on any of the 5 that I mentioned, you think I missed something, or that you could add something, put it in the comments below. And if you think of anybody that could benefit from this information, please share it.